The more that China empowers themselves, the more sway they have over U.S. and Western decisions and trade agreements and, Forex type things. So why wouldn't they play that hand as much as they possibly could, knowing if they wanted to, yeah, sure, they could back the yuan with gold and, then basically allow the rest of the globe to choose. Do you want the debt-backed fiat currency of the West, or do you want something here that's got solid backing to it?
In the 1990s, he created a billion-dollar copper producer. In the 2000s, he launched what would become one of the world's top primary silver producers. And in 2015, he started what he believes will be his third billion-dollar company. This is the one gold stock to research right now. Visit crushthestreet.com/investright.
Hello, everyone, and welcome into crushthestreet.com. I'm joined today with a returning guest. He's going to give us the insight about what is going on here in April. We got some significant news that is transpiring specifically on April 19th. His name is Eric Hadik of Inside Track Trading, and he's been on the show before. He had some very significant calls talking about gold and silver and how they are going to have a meaningful advance here in 2016, and that 2016 would be the year. He's got years of experience. And Eric, thank you so much for coming on the show with me today.
Oh, thanks for having me back, Ken. It's always a pleasure.
Absolutely. Eric, I got to start off with what we are seeing here with the Chinese Shanghai Gold Exchange and the changes that are going to happen, namely on April 19th, being that the yuan is going to be used to price what is going on with the exchange. So I want to get your thoughts on this. And, is China trying to position itself as a larger player in the precious metals arena?
Well, I absolutely think that is the case. And I think that if you look at specifically the last 2 to 3 years, China has definitely been escalating their move into the entire financial arena. And it's, I keep coming back to the topic of cycles with that, but it's just uncanny to me that 7-8 years ago, I was documenting certain long-term cycles in China's history and said that 2014 to 2017 would be a real crescendo in those cycles, and a time when I thought you'd see a big, another push in China's, their aspirations to be a bigger player across the financial markets. And right away, as soon as 2014 started, you first got the announcement of the BRICS Bank, which China is one of the 5 key players there, and starting their new development bank, which would ultimately compete with the IMF and the World Bank. Then that wasn't good enough for them. Then they also had their own Asian Infrastructure Investment Bank, which was another competitor to the World Bank and the IMF. Obviously, at this stage, neither one of those banks has even come close to reaching its potential. But again, it's that positioning. And there's been several major deals dealing with oil, with China and Saudi Arabia, and refining. The 2 big refining contracts that they established there, and between China and Russia with the 30-year gas deal that would be priced only in rubles and yuan. Each one of those, to me, is a step in this process. I'm not looking at any individual one as being the make or break, as some people are talking about this, gold fix coming up, still scheduled for April 19th, although even that, it's been more rumored confirmation of that. Reuters just had a couple articles out yesterday and the day before that seem to add credibility to that. But yes, it's China one more step in their goal and their procedure of becoming a major player across the economic spectrum. I know I've read some of the real sensationalist analysis on this, that April 19th is going to be, the day that the world goes to hell in a handbasket if you're in the West, and where the East suddenly dominates the entire world. Well, I think that's kind of naive each time another event like that comes up, and it's touted that way. But if it does come to be, this could be another critical shot across the bow to the Western financial and banking interests, and now the gold and silver market.
Yeah. Is it fair to say that, that China is not ready for the U.S. and the rest of the West to go to hell in a handbasket based on their investments and just the way the whole global economy is at the moment? And maybe in the next few years, they'll be more positioned to, quote unquote, allow the West, or to see the West go to hell in a handbasket?
Absolutely, and if you think just in normal thought processes and put yourself in China's perspective, there's a couple perspectives that I keep thinking about. One is it's kind of like if you had some information, some extortionary or blackmail information on someone, and you were a devious individual and you wanted to take full advantage of that, would you just blurt that information out to everyone and really destroy that person all in one fell swoop? Or would you see how much mileage you can get out of it with that individual? And okay, if you don't do this for me, I'm going to let this out. If you don't do this for me, I'm going to let this. I think in many respects, it's the same thing. The more that China empowers themselves, the more sway they have over U.S. and Western decisions and trade agreements and, Forex type things. So why wouldn't they play that hand as much as they possibly could, knowing that they've all allegedly got that nuclear option, for lack of a better term, in their back pocket?
Mm-hmm.
If they wanted to, yeah, sure, they could back the yuan with gold and, then basically allow the rest of the globe to choose. Do you want the debt-backed fiat currency of the West, or do you want something here that's got solid backing to it? But as you mentioned or alluded to there, I don't think they're ready for, one of their major trading partners to go down the tubes, and then every trading partner of that trading partner, you have the domino effect. You may say, oh, well, China's got these other big consumers. Well, those big consumers have a lot of ties in with the U.S. and the West, and if currency and banking all went to heck, that would have its domino effect back to China. So it seems naive and more for shock value and alarmist sensationalism when you hear those that, every next thing is going to be the doomsday purveyor. So I think they're going to use this to their utmost benefit and probably stretch it out over several years.
Eric, I'm looking at gold right now, and it's down about $21 at the moment, $12.27 as we do this interview on April 14th, 2016. And you had talked about gold and having some sort of secondary low here in April, potentially, before it sees its spike higher, looking at your cycle work. And I'm wondering, is this Shanghai Gold Exchange, the price fix, what's going on with the yuan, a potential catalyst that is coinciding with your 2016 cycles for gold?
I think that it could be part of that. I think there's a lot of factors out there. But specifically, when you're talking about the April 19th Shanghai Gold Exchange gold fixing speculation, to me, I think this is another thing that so many more novice traders or investors completely miss, and that is the idea that the markets anticipate things in advance. And if we're sitting here talking about the Shanghai Gold fixed, and it's plastered all over the internet, and it's out there for anyone to just stumble on, then it's already factored into the market. It's not that all of a sudden on April 19th they're going to flip the switch and only you and I and a few of our listeners have known about this up till now, and everyone's going to say, oh my gosh, they're fixing gold now. It's Shanghai Gold Exchange. We better buy gold. And yet that's how so many people out there convey it or understand it. And that's why you also get kind of in an analogy in the stock market or in a particular stock, you get a big announcement. Maybe it's just earnings or something else, but they're earnings that have been anticipated for the last 2 months. So everyone that's bullish on this stock has been buying it. Then the earnings come out, and some novice trader picks up the newspaper the next day, for those that still even read a hard copy newspaper, sees this stock had these great earnings, and they go out and buy the stock. Well, everyone that was there to buy that stock has already bought it. And often the astute traders are selling it when that good news comes out because they know there's no one left to buy it except for a few Johnny-come-latelys. And so it's the same thing with events like this. If this event has been so just communicated all through cyberspace, then if it is a valid event, the big players have already positioned for it. So any move right at that time is going to be maybe a quick spike for, again, the latecomers to jump in, get sucked in on a quick upswing, and then have those that were long since mid-December taking some profits and saying, okay, you want to buy it, I'll sell it to you. Because they're already, the smart traders are already looking ahead to the next event that may not be well publicized yet or not well known, and positioning for that. So I don't know that I would see it as a catalyst, but I would see it as another confirming indicator that's going to, and a corroborating indicator that it's this entire sequence of events that I am looking at, not just an isolated one.
Eric, so since our last interview, gold has kind of been in this trading range here in the 1200 range, and I wanted to kind of get your thoughts in conclusion here with what we've seen and how it's playing out with your analysis and just your prognosis for precious metals here going forward.
Well, the whole thing that we've been talking about, and I've even gotten some flack from some of this, from those that thought gold could only go straight up because of this fundamental or that fundamental. But a lot of the technicals, the chart structure, the way gold had rallied into early March showed that it needed to go into a corrective or consolidation phase where you kind of set a new plateau of a trading range at a higher level and start to build a foundation for the next upthrust. And I thought that from early March into mid-April, we would be in that phase. I think that the second half of April, if gold can hold above 1190, I think that then you'll start to see the indications of a second impulse wave or second more major advance start to unfold. And there's certain signals that I'll be looking for to both confirm that and also to help time exactly when the best time to get in for the accelerated advances. But right now, I think that gold is still in a little bit of a consolidative phase. There's a couple short-term patterns that I'm watching between now tomorrow, the 15th, and then beginning of next week, that will help me hone when I want to start getting aggressively back onto the long side. And so I think that I'm looking at late April through late June to be the next upswing in gold, but that even needs to be honed down to a more specific strategy.
Well, excellent analysis, Eric. This is Eric Hadik of Inside Track Trading. And Eric, if you could just share a little bit about your services with our audience. I'm sure everyone would want to be able to reach out to you if they so choose.
Yeah, well, we have a couple publications, and we are happy to send out some free samples to anyone that wants to inquire. The best way to do that is through our flagship website, InsideTrack.com. That's spelled with the extra I in the middle, InsideTrack.com. You can also find a lot of articles and analysis pertaining to the 40-year cycle that I discuss a lot on our secondary website, 40yearcycle.com. So again, they can inquire. We're happy to send out the samples and provide a little more specific analysis and trading strategies that we are publishing for our subscribers.
Yeah. Eric, thank you again for coming on the show and just sharing this knowledge with us. It's very insightful, and I know a lot of us are going to be watching what happens, as we continue to progress and, China continues to become a larger position in the precious metals arena, and it was great to get your analysis on this. So thank you very much.
Thanks for having me back, Kenneth.